Hello and welcome to the Cash News Podcast, your go-to source for informative conversations about all things cash and currency. From cash security and payments technology to the cash supply chain, we're here to share insights on the issues shaping the world of cash today. Join your hosts, Tom Meehan, Sean Ferrari, and Brad Moody as they dive into the latest trends, strategies, and technology. This is the Cash News Podcast. Now, here's Tom, Sean, and Brad.
Welcome back to the Deep Dive. We are jumping straight in today, looking at how Americans are actually paying for things.
Yeah, it's fascinating stuff. We've got the brand new Federal Reserve report, the Diary of Consumer Payment Choice.
Right. This is based on data collected late last year, 2024. And, if you thought we were all heading straight for a completely cashless world, well, this report throws up a bit of a paradox.
It really does. Because, okay, on one hand, digital payments are booming. Credit cards, mobile payments, remote shopping, it's all accelerating, no question.
But then there's cash. It hasn't vanished. The Fed's data suggests it's actually hit this sort of baseline level, a floor, as we're calling it.
Exactly. That's the core puzzle we want to unpack. How are these two trends, rapid digitization and stubborn cash usage, coexisting? We're going to dig into who's using what and why.
Let's get into it. So first things first, the big picture. Americans are making more payments overall.
Yeah, that's the headline trend. The average consumer made 48 payments a month in 2024.
48. That's a record high for this diary study, isn't it? Up 2 from 2023.
It is. And it's just, a pretty active economy, but also maybe changing habits. People might be making more, smaller, quicker payments, especially digitally.
And what's fueling that growth? The report seems pretty clear on that.
Oh, absolutely. It's credit cards. They are the engine here.
Really pulling ahead of debit now.
Definitely. In 2024, credit cards accounted for 35% of all payments. Think about that. Over a third of everything.
Wow. And that's not just a blip, right? There's a longer trend.
A massive trend. The share for credit cards is up 17 percentage points since just 2016. That's a huge shift in only 8 years.
So why credit? Is it just rewards points?
Rewards are a big part of it, yeah. Especially for higher earners. Cash back, travel points. It incentivizes using credit, even for small stuff where maybe you used debit before.
Makes sense.
But it's also about security, perceived security anyway, particularly for online shopping. People feel a bit safer using a credit card number than linking directly to their bank account via debit.
Right, that buffer.
Exactly. Plus, the fraud protection tends to be better, or at least easier to deal with. So debit's holding steady, but it's just not got that same growth momentum.
Okay, so credit cards are driving the volume. Where are these extra payments happening? Is it all in stores?
Well, that's the other key part of the story. A lot of this increase is happening remotely, not at a physical checkout.
Online shopping, paying bills through apps, that sort of thing.
Precisely. Remote payments, which includes online purchases and also person-to-person payments like Zelle or Venmo, they hit 23% of all payments in 2024.
Almost a quarter.
Yep. And that's a long-term climb. It just keeps going up.
Which naturally cuts down the opportunities to use cash, right? You can't exactly use a $20 bill on Amazon.
You can't. It structurally favors digital. That shift to remote buying, which really got a boost during the pandemic, looks permanent now. It creates fewer and fewer situations where cash is even relevant.
Still, though, that means, what, 77% of payments are still happening in person?
That's right. The majority are still face-to-face.
So that's the main arena where cash could still compete.
It is. Although even there, things like contactless tapping phone or card are making digital super fast, maybe even faster than handling change. But yeah, that big chunk of in-person transactions is basically what keeps cash in the game at all. And that leads us straight to this idea of the cash floor.
Okay, this is where it gets really interesting for me. We've got more payments overall, credit cards soaring, remote growing. You'd expect cash to just be plummeting, right?
Logically, yes. Its share of the total payments is down, obviously, if other things are growing faster. But the actual number of cash payments per person, that's surprisingly stable.
Stable how?
Well, cash was the third most used payment type, after credit and debit. And the average consumer made 7 cash payments per month.
7? Okay.
And here's the kicker. It's been 7 payments per month for the last 4 years, since 2021. Rock steady.
4 years. Wow. So despite everything else changing, that baseline level of cash use isn't really budging.
Exactly. It suggests we've hit some kind of floor. People seem to need or choose to make about 7 cash transactions a month, regardless of how easy digital gets. It accounts for 14% of all payments.
14%. So roughly 1 in 7 payments is still cash. Why? What keeps cash relevant for those 7 transactions?
The report points to cash's unique features, things that digital just can't perfectly replicate. There are 5 key ones they highlight.
Okay, let's hear them.
First, anonymity. Simple as that. No digital footprint. For some people, for some purchases, that's crucial.
Right, privacy.
Second, ubiquity. Almost everywhere takes cash. Small vendors, garage sales, tipping someone directly, places where setting up card payments might not make sense. It just works.
Okay, 2 down.
Third, accessibility. This is huge. If you don't have a bank account or your credit isn't great, cash is your way in. It's immediate financial inclusion.
Essential for the unbanked. Got it.
Fourth, reliability. Power out, internet down, card reader busted. Cash still works. It's the ultimate fallback.
Feel safe.
And fifth, no marginal transaction costs. For the user, anyway. No potential overdraft fees like with debit, no interest like credit, no waiting for funds to clear. What you see is what you get.
So those 5 things together, anonymity, ubiquity, accessibility, reliability, no fees, they kind of lock in that minimum level of demand.
That seems to be the hypothesis. These characteristics ensure cash keeps a specific necessary role.
And where are those 7 cash payments typically happening? What kind of transactions are we talking about?
Overwhelmingly, small ones, low value. The data shows 70% of all cash payments were for less than $25.
Okay, so coffee, a snack, maybe bus fare, that kind of thing.
Exactly. The average person made 5 cash payments a month just in that under $25 range.
But hang on, didn't you say earlier that credit cards are making inroads even for small stuff because of rewards? And debit is easy with tapping.
Yes. And that's where the battle is fiercest. For those payments under $25, cash is now neck and neck with cards.
Neck and neck.
Yeah. In 2024, for transactions under $25, people were equally likely to use cash, debit, or credit. All 3 average about 5 payments per month in that range.
So cash used to own that space, but now it's just holding its ground against intense competition.
Spot on. It's not growing there, but the fact that the number of small cash payments hasn't collapsed further, even with tap-to-pay everywhere, shows how resilient that core use is. People are specifically choosing cash for those 5 small purchases a month.
And where are they making these cash payments? Specific types of stores?
Definitely leans towards what the report calls cash-heavy retailers. Think grocery stores, convenience stores, fast food places.
Right.
If you look just at those locations, the number of cash payments has held steady at around 5 per month since 2021. Even while people might be using cards more for their big weekly grocery shop, they're still using cash for maybe a quick item at the convenience store or paying for lunch. It reinforces that core need.
Okay, let's pivot back to the digital side, specifically the device that's in everyone's pocket, the mobile phone. The growth there seems pretty dramatic.
Oh, it's explosive. Consumers averaged 11 payments using their mobile phone in 2024. That's up from 10 the year before.
11 payments a month via phone.
Yeah. And think about what that means in terms of share. Mobile phones were involved in 23% of all payments, nearly 1 in 4.
Wow.
And for remote payments buying online, P2P, the phone is king. It facilitated 45% of those. Almost half.
Okay, but we need to be careful here, right? When we say payments with a mobile phone, what exactly does that mean? Are people paying with Venmo at the grocery store checkout?
That's a really crucial distinction the report makes, and yeah, we need to unpack it. Mostly, no. The big growth isn't in using apps like Zelle or Venmo as the payment instrument itself at the point of sale. The volume for those specific mobile apps is actually pretty stable.
So what is growing then?
It's people using their phone as the device to make a payment, usually a card payment. Think Apple Pay, Google Pay, tapping your phone instead of pulling out the plastic card.
Okay. So the phone is becoming the digital wallet, the interface for the underlying card or maybe bank transfer.
Exactly. It's replacing the physical card for in-person contactless payments. It makes non-cash transactions even smoother, even quicker.
Which, again, probably makes cash seem a little slower, a little clunkier by comparison at the checkout.
It likely contributes, yeah. And we see that reflected in the data. The share of non-cash payments made in person rose from 60% back in 2016 to 78% in 2024. A lot of that is powered by mobile tap-to-pay.
And I bet this mobile adoption isn't the same across all age groups.
Not even close. There's a huge generational gap.
Who's leading the charge?
The youngest adults, 18 to 24, they're absolutely mobile first. They use their phones for 45%, almost half of all their payments.
45%. For them, pulling out a phone to pay must be completely second nature.
Pretty much. And if you look specifically at in-person mobile payments, the 18 to 34 group does that about 4 times a month.
Okay. Versus older folks.
Compare that to people 55 and older. They only use their phone for in-person payments about twice a month, so half as often.
Still, usage is up across the board, you said.
Yeah, everyone's using mobile more than they were in, say, 2020. But the younger generation is adopting it way faster, which tells you something about the long-term direction. Even if that cash floor holds for now, generational replacement will push the overall cash share down over time.
Beyond just what people do, what about what they prefer? When you're standing there at the register, what method do people ideally want to use? Has that changed?
It has, and this is maybe one of the starkest signs for cash's future role. The preference for using cash for in-person payments has dropped significantly,
How much?
down to 17% in 2024.
17% prefer cash. What was it before?
Back in 2016, it was 27%.
Wow, a 10-point drop in preference in 8 years. That's huge.
It really is. It means 1 out of every 10 people who used to say cash is my preferred way to pay in person now says they prefer a card.
So it's not just that digital is sometimes more convenient. People are actively changing their minds about what's best.
Exactly. Credit card preference went up, debit preference stayed about the same.
Yeah.
It suggests that the ease, the rewards, the whole digital wallet experience is genuinely changing how people feel about paying. Cash is shifting from a preferred method for some to more of a backup or necessity-driven choice.
We can't really talk about payment choices without looking at who the consumers are. Income makes a massive difference, doesn't it?
Oh, absolutely. Household income is probably the single strongest predictor of how someone pays for things. It shapes everything: access to credit, access to banks, even how you budget.
So let's start the lower end. Households earning less than, say, $25,000 a year. How reliant are they on cash?
Extremely reliant. For that group, cash made up 24% of all their payments in 2024.
24%. Nearly 1 in 4 transactions.
Yeah. Compare that to highest income group that use cash for only 9% of payments. So the lowest income households are using cash more than twice as often.
Why is that? Is it just lack of access to cards?
That's part of it, certainly. Less access to credit, maybe less likely to have traditional bank accounts, the whole unbanked or underbanked issue.
Right.
But it's also about behavior. For people managing very tight budgets, cash can be a powerful tool. There's that psychological pain of paying. When the cash is physically gone from your wallet, you feel it more. It helps control spending.
Unlike swiping a card, which can feel a bit abstract.
Exactly. And it avoids risks like overdraft fees on debit cards or high interest rates on credit cards if you can't pay the balance. For some, cash just feels safer and more predictable.
Okay, now contrast that with the highest earners, those making over $150,000.
Complete opposite picture. Cash is only 9% of their payments. What dominates for them? Credit cards. 51% of their payments are on credit.
Half. So they're leveraging the system rewards convenience.
Absolutely. They're maximizing the benefits, using credit for cash back, points, streamlining payments. It's a tool for optimization.
So you've got this stark divide. For one group, payments are about convenience and rewards. For the other, they're fundamentally about access and basic budgeting control, with cash playing a vital role.
That's the crucial takeaway. It highlights a potential social issue. As we push towards more digital payments, which benefits many, we have to be really careful not to inadvertently make life harder for those who rely on cash for essential functions. There's a real need to balance innovation with accessibility.
Okay, income is one big factor. What about age? We touched on mobile use, but how does age affect cash use overall?
Age is another major divider. Older adults, let's say 55 and older, they rely on cash significantly more.
How much more?
They use cash for 19% of their payment.
Okay, compared
Compared to about 10% for the middle-aged group,
Wow.
25 to 54. So nearly double the rate for the older group.
Why the difference? Just habit.
Habit plays a big role, definitely. Decades of using cash makes it comfortable, familiar. Maybe also a bit more skepticism about digital security sometimes, though that's changing. They're essentially carrying forward the payment patterns that used to be common for everyone.
Right. Back in 2016, cash use was much higher across all ages, wasn't it?
It was around 30% for pretty much everyone. The older groups were just letting go of that habit more slowly.
And the youngest group, 18 to 24, we know they love mobile. What's their cash use like?
Lowest of all. Only 10% of their payments were cash.
10%, matching the middle-aged group?
Right. They show the most rapid decline since 2016. They came into their spending years when digital was already dominant, plus they embraced mobile fastest. There's just less friction for them in using non-cash methods.
So again, you see that generational shift. As time goes on, the overall average cash use is likely to drift lower, even if that core group of 7 payments per month remains essential for individuals who still use it.
That seems the most likely trajectory based on this data.
Okay, we've established this floor of 7 cash payments a month. But why are people making those payments? Is it because they genuinely prefer cash in those moments, or is it more out of necessity?
This is maybe one of the most telling parts of the whole report. It digs into that motivation. And the answer is, well, it's mostly necessity, or at least not preference.
What does the data say?
Get this. Nearly two-thirds, 66% of all cash payments were made by people who actually prefer to use a card, either credit or debit.
Wait, say that again? 2 out of 3 cash transactions are done by people who would rather have used plastic.
That's what the survey found, 66%.
Wow. That screams backup plan, doesn't it? Cash is what you use when your preferred method doesn't work or isn't suitable.
Exactly. It's the ultimate fail-safe. Your card gets declined, the shop's internet is down, it's a cash-only vendor like a food truck or a farmer's market stall. You need to leave a tip separately. In those moments, cash steps in.
It fills the gaps in the digital system.
Precisely. And contrast that with credit cards. When people use credit cards, 82% of those transactions are made by people who say they prefer credit cards. So credit use is driven by preference. A lot of cash use is driven by circumstance.
But hold on, this creates a bit of tension, doesn't it? We just talked about how vital cash is for low-income folks, for budgeting and access. Now we're saying 2/3 of cash use is by card-preferring people using it as a backup. So is this cash floor just propped up by richer people needing an occasional fallback?
That's a really sharp question. I think the answer is probably both. Cash serves different primary roles for different groups.
How so?
For the lower-income consumer, it might be the primary tool for managing daily spending. For the higher-income, card-preferring consumer, it's more often that backup, that insurance policy against digital friction. The 66% figure reflects the overall transaction volume, which is naturally higher among those who spend more.
Okay, so the fact that card prefers make up most cash transactions doesn't mean cash isn't fundamentally necessary for the smaller group who rely on it day to day.
Exactly. And if that backup option disappeared, the card-preferring people would mostly be fine. They'd find another digital way. But the people who rely on cash as their primary tool would be hit much harder.
That makes sense. And this idea of cash as a safety net probably explains why people still carry it, even if they don't use it often.
Definitely. The habit of carrying cash is incredibly persistent. About 80% of consumers said they had cash on them in their wallet, pocket, purse on at least one day during the study period in 2024.
80%. And has that number changed much?
Barely. It's been hovering around that 80% mark since 2018. People might use it less, but they still want it available.
Are they carrying less, though? What's the average amount people have on them?
It dipped slightly in 2024. The average amount carried was $67.
$67. Down a bit from the year before.
Yeah, down about $7 from 2023. But again, huge age differences.
Let me guess, older people carry more.
Way more. People over 65 carried an average of $109.
Wow. Compared to the youngest.
Adults aged 18 to 24 carried only $39 on average.
So almost 3 times less. Why such a big difference?
Probably a combination of factors. Older adults might encounter more situations where cash is needed or preferred. They might be less comfortable relying solely on digital for immediate funds. Maybe just have it.
Okay, so that's cash for spending. What about cash saved up, like an emergency stash at home? The report calls this store of value holdings.
Right. Cash kept aside not for daily use, but as savings or an emergency fund. That saw a huge spike during the pandemic. People got nervous and wanted physical cash.
Has that come back down?
It's come down from the peak, yes. But it's still way higher than before the pandemic. The average amount stored was $306 in 2024.
$306. How does that compare?
Well, the peak in 2022 was $418, so it's down from that. But back in 2019, before COVID, it was only $241.
So people are still keeping significantly more cash tucked away than they used to, like a lasting sense of uncertainty.
It looks that way. A kind of psychological hangover from the pandemic disruptions. People want that tangible liquid safety net close by, just in case.
One last check on this backup idea. When people do use cash, is it mainly because the place didn't accept cards? Or are they choosing cash even when cards are an option?
That's the clincher. The data shows that 76%, 3/4 of cash payments in 2024, happened at places that also accepted cards.
Okay. So in most cases, they could have used a card, but they chose cash instead.
Exactly. They actively chose it. Maybe for privacy, maybe for speed on a small purchase, maybe for budgeting, maybe just out of habit for that specific type of transaction. It confirms cash isn't just being used by default when digital fails. It's still a deliberate choice much of the time. Hashtag outro.
So wrapping this all up, we're left with this fascinating picture of the U.S. payment system. It's moving in two directions at once, isn't it?
It really is. You've got this undeniable rapid acceleration towards digital credit cards leading the way, mobile phones transforming how we pay, especially remotely.
But at the same time, you have this stubborn persistence of cash. It's found its floor, that baseline of about 7 payments a month, holding steady for 4 years now.
And that stability is key. Cash is still the third most used payment method overall. And people don't seem ready to give it up.
What did the survey say about future plans?
Over 92% of people said they had no plans to stop using cash. 92%. And that number's been consistent since 2022 as well. They see it as an ongoing necessity.
And the usage figures back that up. 83% used cash at least once in the last month. Only credit cards were higher. It might not be the workhorse it once was, but it's still fundamental.
Absolutely. And when you think about the sheer scale you mentioned, the $2.3 trillion in U.S. currency floating around globally, and you combine that with the stabilized domestic demand, especially its critical role for lower income groups, and as that universal backup, it really forces some tough questions, doesn't it?
Yeah, like what responsibility exists to maintain cash access and acceptance? If digital becomes almost free for merchants, but cash handling has costs, what stops cash from becoming marginalized, even if consumers still need it?
Exactly. If that cash floor is genuinely essential for financial inclusion, and maybe even for the resilience of the whole payment system as that ultimate backup, how do we ensure it remains viable? Who ensures that?
It leaves you thinking, doesn't it? If our increasingly slick digital world still fundamentally relies on old-fashioned cash as its safety net, what's the real cost of letting that net fray, especially for those who depend on it most? Something definitely to mull over.
Thanks for listening to the Cash News Podcast. We hope you found this episode insightful. Don't forget to like and review us on iTunes, Spotify, Stitcher, or wherever you listen to your podcast. Follow us on LinkedIn and Twitter, and be sure to visit us at thecashnews.com to stay up to date with the latest on the world of cash. Thanks again for listening to the Cash News Podcast.